Gold hasn't really rallied during this. Now, of course, gold had a huge rally before the Iran war broke out. So it's just kind of consolidating. Don't jump to the wrong conclusion that this is the end for gold, or gold's not going to be a safe haven, or gold's not going to go up. Gold is going up. The war is very bullish for gold because the war is going to be very inflationary, and ultimately it's going to lead to a much lower dollar. And that is going to be bullish for gold. But for now, you've just got another opportunity to keep buying gold, to keep buying silver. Silver's about $85.50. Again, we're nowhere near 50. We broke out. We're just consolidating. And silver has been as high as 100.
Amid rising geopolitical tensions and persistent inflation, gold and silver are emerging as the ultimate safe havens. While markets fluctuate and stocks see mixed performance, these precious metals continue to hold value, offering investors a tangible shield against currency devaluation and economic uncertainty. Even temporary dips in prices create prime opportunities to accumulate positions before the next upward surge. A well-known economist and financial commentator, Peter Schiff, argues that growing global concern about U.S. power may eventually weaken America's financial dominance. According to him, many countries are increasingly wary of a world where the United States can use its economic and military strength aggressively rather than purely defensively. Although the U.S. dollar has shown some resilience, he believes geopolitical tensions, especially conflicts involving Iran, will ultimately fuel inflation and weaken the dollar over time. In this environment, Schiff maintains that gold and silver remain in a long-term uptrend. While prices have paused after a strong rally, he sees the current consolidation as a temporary phase and an opportunity for investors to accumulate precious metals before they move significantly higher. Schiff also notes that geopolitical conflict can create economic instability and long-term resentment that may increase global tensions. Despite limited declines in major equity indexes, he believes markets remain overly optimistic about the consequences of war and its economic fallout. Interestingly, the biggest short-term losers during the turmoil have been gold and silver mining stocks, even though the prices of the metals themselves have held steady. He explains that these stocks had surged strongly in previous years, so the recent drop reflects profit-taking and investor caution rather than a fundamental change in the outlook. In his view, once uncertainty fades and precious metal prices resume their climb, mining stocks could recover alongside the broader bull market in gold and silver. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying close attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
The world is like, wait a minute, we've created a Frankenstein monster here. We got to do something about this. We got to take the U.S. down. I don't think the message is, this is so great. Look at how powerful America is. They can protect us. I think the world is like, uh-oh, look at how powerful America is. They could attack us, right? We're not necessarily a defensive force for good, but our power could be used offensively. Because again, it's America first. Who gives a shit about anybody else? We do what we think is right, and might makes right. And we've got all the might. Well, the world can take that away. And I think they are going to take that away. Now, so far, we've seen some strength in the dollar. Not a lot of strength, but we had seen some strength in the dollar. And I think that's one of the reasons that we haven't seen a big run-up in gold. I mean, gold prices are still around 5,150. So gold hasn't really rallied during this. Now, of course, gold had a huge rally before the Iran war broke out. So it's just kind of consolidating. Don't jump to the wrong conclusion that this is the end for gold, or gold's not going to be a safe haven, or gold's not going to go up. Gold is going up. The war is very bullish for gold because the war is going to be very inflationary, and ultimately it's going to lead to a much lower dollar. And that is going to be bullish for gold. But for now, you've just got another opportunity to keep buying gold, to keep buying silver. Silver's about $85.50. Again, we're nowhere near 50. We broke out. We're just consolidating. And silver has been as high as 120 or something like that, just like oil, almost the same price that oil got to. And both oil and silver are going to make new highs. They're going to make considerable new highs. So you have an opportunity to buy them now. And, the stock market has moved down. The Dow Jones is trading, what is it, about 47,000, so a few thousand points below 50,000. But it's really not that big a drop. People are still much too optimistic on the outcome here. And again, even if we win based on the president's new definition of deciding that we've bombed them enough and there's nothing left to destroy, there's still a country there, there's still a regime there, and there's still going to be a lot of animosity. In fact, there's going to be more animosity. There's going to be more hatred of America. And I think that after this war is over, the risk of some type of terrorist retaliation is going to be a lot greater. So I think, not that I'm forgiving acts of terrorism. I don't. But I recognize that if you piss off people who are prone to acts of terror and you make them really, really mad, then you increase the likelihood that they're going to do something, right? It's blowback, right? I know when Ron Paul talked about blowback a long time ago, he got into a lot of trouble because people said, oh, you're blaming America for 9/11. No, he wasn't. He never blamed America for 9/11. But what he did say is we can't just ignore what happens when we go into the Middle East and, piss off a lot of people. That this might happen. It doesn't excuse what they did, but you understand that your own actions are what created the environment that fueled the hatred and the animosity that led to people wanting to kill themselves in order to seek revenge against the United States. So you can't absolve yourself from that. If you go in and you start kicking up hornet nests and then one of them stings you, you can't say you didn't have anything to do with it, because had you stayed out of the hornet's nests, you wouldn't have got stung, right? And that's the point that Donald Trump was, that Ron Paul was trying to make, and he got, vilified. He made it in a debate that, oh, you're making excuses. He wasn't making excuses. He never justified what the Iranians did when they, or not the Iranians, just the terrorists. Never once justified it. The biggest losers in the stock market so far from this Iran war have been the gold stocks, gold and silver mining stocks. Even though gold and silver prices haven't really come down, all that happened is they didn't go up. Gold and silver prices are about where they were, but the mining stocks have got hit pretty hard, way harder than the Dow or the NASDAQ, or, any of those. Now, of course, gold and silver stocks went up a lot more. The market was, flat. The gold stocks were way up in 2026 after having killed it in 2025. So they're losing some of those gains as people are taking profits or selling stuff, and they're getting nervous about the war, about recession. Maybe the Fed is not going to cut rates because of the high oil prices or whatever.
Peter Schiff argues that the recent drop in gold and silver mining stocks has created an even better buying opportunity for investors. According to him, these companies were already undervalued before the decline, and the pullback has made them more attractive despite strong fundamentals. While rising oil prices can increase operational costs for mining companies, he believes the impact will be relatively small compared to the higher revenues generated from rising gold and silver prices. In his view, the market has temporarily overlooked the improving profit outlook for these miners, and once weak sellers exit the market, the sector could rally sharply and potentially reach new highs alongside the metals themselves. Schiff also criticizes the interpretation of recent inflation data, arguing that the latest CPI figures show little real progress in controlling inflation. Although official numbers indicate annual inflation around 2.4 to 2.5%, he believes the true rate is significantly higher and that rising energy prices will likely push inflation upward again. He warns that the central bank's approach cutting interest rates despite persistent inflation could worsen the problem. Even technological advancements like artificial intelligence, which should lower production costs and reduce prices, are being overshadowed by monetary inflation. In his view, government policies and money creation are eroding the natural benefits of technological efficiency, reinforcing the case for owning assets such as gold and silver as protection against declining purchasing power. Let's get back to the video.
But this has created another great buying opportunity in the mining stocks because they were a great buy before this decline, and now they're an even better buy because their profits are not declining. Now, yes, oil prices have gone up, and that is going to be a factor in the profits of gold and silver mining companies. Even with the higher oil costs, it's still not going to offset the profits from higher gold and silver prices. Those higher profits were still not reflected in the stock prices. So you could say some of the benefit has been reduced by the decline by the increase in oil prices. But again, if the market thinks this is just temporary, which it obviously does, because if they thought it was permanent, there would be a much bigger drop in the S&P and the NASDAQ, and there would be a much bigger rise in oil stocks. I mean, oil companies have gone up. My oil stocks are doing well. They're making new multi-year highs. And I talked about how I added to our oil positions and I added to my own oil positions a few months ago, anticipating higher oil prices, not necessarily because of a war, although I knew that was possible, but I thought oil prices were going to go up. And I was right about that. The market just assumes that oil price spike is a short-term phenomenon. So it's not going to impact earnings according to the way the market views it. So they should be looking at these gold and silver mining stocks as incredible buys, which they are. And I think they're going to rally big any day. It's hard to say when they're going to flush out the weak sellers, but that's going to happen. And gold and silver are going to rise, and these stocks are going to make new highs. And I think you want to take advantage. So not only do you want to go to Schiff Gold and buy physical gold and silver now, but you want to buy the mining stocks, whether you pick your own mining stocks. I think the overall stock market hasn't gone down enough, but gold hasn't gone up enough. It hasn't even gone up at all, and these gold and silver mining stocks should not have gone down, yet they did, and that just represents another great opportunity to buy them. Anyway, so I want to talk about the CPI numbers that came out today, because there's a lot of talk about how, these are good numbers. And they're not good numbers. They came out as expected, but prices were up 0.3 for the month of February. Year over year, up 2.4. This is exactly as expected. Ex-food and energy up 0.2. And year over year, up 2.5. And these are the same numbers from January. Year over year inflation, 2.4 in January, 2.4 again in February, and ex-food and energy, 2.5, 2.5. What does that show? No progress. We're not getting any closer to the Fed's 2% target. And this is, when oil prices were, a lot lower than they are right now. So obviously these numbers, the CPI numbers, are just going up from here. They're not going down. So it's not good news that we've kind of bottomed out well above the Fed's target and we're poised to move higher. And of course, as I've always said about the government numbers, they're not accurate anyway. So if the government claims that prices are up 2.5%, it's more likely they're up 4 or 5%, not 2.5%. So the numbers don't really mean anything, but they are going up. And if they mean something to the Fed, it means that, you still have a lot of work to do as far as hiking rates. Meanwhile, they're cutting rates. And they're implying that they're going to be cutting rates more in the future, which is obviously a mistake. And of course, we do have all this AI. I don't know how big an impact it's had thus far on overall productivity. Probably had some, but prices are rising anyway. The benefit of AI is supposed to be that costs come down. Well, if they're not coming down, they're going up. That's because of inflation. I mean, let's say that AI would have reduced prices. If AI made businesses so much more efficient that they can produce a lot more with less, lower labor costs, lower material costs, businesses became more efficient, The reward for greater efficiency is lower prices. Well, if the government robs us of that reward by creating inflation, that's still a problem. And I keep hearing people talk about how, well, AI is deflationary, like that's a bad thing, and the government needs to offset that by creating inflation. It's not a bad thing. And it's not really deflationary because it doesn't contract the money supply. That's what the real definition of deflation is. It's a contraction of the money supply. What it does is it expands the goods supply. And that's a good thing. That means lower prices. But the government likes to take advantage of that, to exploit that by robbing the benefit that the consumer otherwise would enjoy from falling prices by printing the money and stealing that gain away from them under the guise of we must have prices going up. So if prices were going to go down, we can't let that happen. So we're going to spend a bunch of money on government programs that make prices go up so you don't have to suffer cheaper prices. You get these higher prices, which are supposedly good for us. Don't forget about buying some gold and silver at Schiff Gold. Let me take a look and see if we've had any kind of reversal because the market was down. Yeah, gold's down about 23 bucks, 51.51. Silver is down about 37 cents, 85 and a quarter. Oil prices, what are they doing? They're about the same, about $93 a barrel for oil. But get your gold and silver while you can.
Gold and silver, together with their mining stocks, continue to be strategically positioned for significant growth in the face of ongoing inflationary pressures and rising geopolitical uncertainty. Periodic price pullbacks offer investors valuable opportunities to accumulate these assets at attractive levels, while higher energy costs and short-term market volatility have not yet fully affected the strong underlying profitability of mining companies. With central bank policies and expansive government spending steadily eroding the value of fiat currencies, investing in precious metals provides not only a reliable hedge against declining purchasing power but also a means to preserve and potentially grow wealth in an increasingly unpredictable and unstable global economic environment. How can investors strategically balance physical gold and silver holdings with mining stocks to maximize returns while managing risk during periods of inflation and geopolitical uncertainty? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support and we hope you enjoy the video.